We're going over the layers that you want to have via your approach to the market. 95% of market participants fail in this space because they don't have a logical, pre-planned approach. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, I'm going to show you all an in-depth perspective from our CYPRX private group chat, going over some GBP, JPY buys that we called out well in advance. As always, being transparent with the students and letting them know what it is that we're looking for in the market. This is going to be an in-depth video breakdown. I'm going to try and get through it as fast as possible, explaining to you all in extreme detail how we're able to layer together a sound and solid approach to these markets to situate ourselves on the right side of the order flow. With that being said, make sure that you guys are taking some notes. Make sure that you guys are paying attention. Again, this is going to be a brief video breakdown showing you all how well in advance, well ahead of the retail hype and crowd, we are able to gauge price action so accurately here at CYPRX. Okay, these are just going to be steps, little tiny tips and tricks that you all can implement, showing you all how we layer our approach to the market. So first, we're going to cover and talk about fundamentals. Okay, fundamentals being the things that the key drivers of FX rates, i.e. like monetary policy, right? Geopolitical tensions, escalations, things of that nature, what drives demand for currency, things of that nature, right? So looking back in our private CYPRX chat, we scroll all the way up here. Something that we had talked about in previous analysis was the divergence between the Bank of England and the Bank of Japan. I even mentioned to the students all the way back on September 26th, so that is over 2 weeks ago, what we were looking for in the market, even though the Bank of England had that one unexpected decline in the CPI report and they had paused raising rates any further and had a more dovish tone the last Bank of England rate decision. That did not change the macro picture of their monetary policy stance, where they still need to focus on bringing inflation back down to 2% goals, and that they will still likely require rates being higher for longer. So we had gauged that well in advance before this move played out, knowing that if the Bank of England took a more hawkish monetary policy stance and continued to increase interest rates, there would most likely be more of a market demand for the Great British Pound up against the Japanese yen. Whereas vice versa, i.e. mentioning that divergence, if we continue to see an easing monetary policy stance or a loose monetary policy stance or a dovish tone from the Bank of Japan, when they're maintaining their easy monetary policy stance, this was most likely going to, again, continue the sell pressure on the Japanese yen. So we had that perspective heading into the market this week. Now, I sent the students an analysis well in advance. This was over 24 hours in advance. You guys can see here, this is from October 9th. Today, as of time of recording, it's 10:30 p.m. Pacific time on the 10th of October. So the day after, this is over 24 hours in advance. You guys can see right here, I sent them an analysis that said safe buys if price continues bullish above the 182.800 major psychological level, which you can see if we head over to the charts real fast. This is the price action that we're going to be going over today. You guys can see the buys above the 182.800 have come into fruition as pre-planned. So again, we're going over the layers that you want to have via your approach to the market. 95% of market participants fail in this space because they don't have a logical, pre-planned approach that manages risk properly and gives you a fundamental perspective on what's actually driving market rates, okay? Like most people come into this market and they're just here to gamble. They're here to try to get rich quick. They're just here to try and guess buys and sell in the market. They never really have any type of good pre-planned analysis, or if they do, it's some type of technical approach that some retail trader taught you based off of support resistance, Fibonacci, Wyckoff, indicator crap. I don't even know what the heck is floating out there in the market. You need none of that to trade here at CYPRX. You just need logic. You need a sound psychological approach, a good understanding of fundamentals, and our perspectives on how to approach technical analysis, right? None of this Wyckovian bull crap, smart money bull crap, none of that stuff, okay? Just sound principles. Where does money sit in the market? Where are the market makers most likely inclined to target next, okay? So safe buys, let's talk about this analysis that we sent to the students and show how we were able to conjure this. So you guys saw in the private chat how we were already talking about the divergence between the Bank of England and the Bank of Japan, making sure that we keep that in the back of our mind. Again, if the Bank of England maintains a more hawkish monetary policy stance, having that perspective that most likely the price is going to go in the upwards direction, benefiting the Great British Pound, right? So you guys can see here, I said to the students, 7:17 p.m., breaking this down literally paragraph by paragraph, I said, at present, I am closely monitoring only two specific trading opportunities within the market. I want to pause again right there. 95% of individual market participants are doing what? Sporadically and impulsively chasing the market, placing trades randomly, left and right, burning through their accounts. Okay? Have a pre-planned analysis. Have a certain onset of conditions in the market that you want to see met before you become a market participant. Okay, whether that's technical analysis, whether that's your little indicator, whatever the heck you got going on, whether that's fundamentals, you need to have a pre-planned approach. What do you want to see happen in the market so that way you can react to those market conditions? So we gauged that we wanted to see a more hawkish monetary policy stance or a continuation via the divergence between the Bank of England and the Bank of Japan. And we wanted to see price above the 182.800, which we got during today's Asia session. We had all of those things come into fruition. So again, remember, I'm teaching you all how we build our layered approach. How do we get comfortable and confident enough to trade this market, to stack the confluences so that we can see potential market impulses, because what we're looking for is buys, to go in our favor. Again, nothing is guaranteed in this market, but what we're doing is we're stacking our odds, okay? That's all this market is. It's trying to put enough odds in your favor to get the confidence to take a trade for it to potentially go in your favor, okay? So I said, the first position that I was looking for in the market pertains to initiating buy positions above the level 182.800. This course of action would obviously hinge on the assumption that the geopolitical tensions that we saw over the weekend and the ongoing divergence in the central bank policy persists, okay? So we would need to see the geopolitical tensions, i.e. the war in Israel, subside. Not obviously, of course, it has not gone away, but not have an impact on the safe haven status of the yen, which it hasn't so far to this point, at least not a substantial amount. We saw a little bit of pressure on the Great British Pound over the Japanese yen over the weekend, right? We saw that nice gap down. We won't go over to that in technical analysis, but just showing you guys again, okay, that's what we were looking for. So we're trying to put all the pieces of the pie together, right? So mentioning that we were looking for buys above the 182.800 and showing you all that we were looking for that divergence, okay? So it says right here, in essence, this entails a market sentiment that reflects a more hawkish stance from the Bank of England and comparably a more dovish approach from the Bank of Japan. In such a scenario, there is a potential for the price to increase further, possibly ranging into the range of the 183 to the 184. And you guys can see, if we head over to the charts, we look at how accurate this is, straight up. Right above the 182.800, I said safe buys above the 182.800 to potentially come into the 183. And we are sitting at the 183 to the T right now. That analysis was given over 24 hours in advance to our private community, right? We've been talking about this since way back on the 26th of September. So now let's get into the technicals. So think about the layers that we have so far. We have the fundamental analysis backing a more bullish trajectory on the Great British Pound against the Japanese yen. Not only that, but what else do we have via market conditions this week? So if you go over to, this is a free platform, okay, if you don't have access to something like Bloomberg Terminal or whatever, and you need a free website to gather fundamentals from, you can go to FX Street or Forex Factory. They're the most simplistic trading fundamental websites that anybody can kind of easily interpret and read, whether you're a cryptocurrency or a Forex trader, all right? But right here, I highlighted, we see this fundamental come out. This came out on the 9th, so, or kind of like last night, right? So it says right here, risk on market mood. Well, overall, we know that the Great British Pound is a more risk on currency. So that means when there's a risk on market mood, it most likely is going to benefit buys on the Great British Pound or benefit demand for the Great British Pound. Whereas vice versa, if there's a risk off market mood, it's going to cause an outflow of the Great British Pound and an inflow into a currency that's a safe haven, like the Japanese yen, right? So I highlighted that because that, again, favors our analysis. Overall, we have bullish fundamentals. Now we also can stack on that there was a risk on market mood, right? So again, we're putting more things in our corner that could potentially solidify and support our narrative of buys above the 182.800. Then what else did we see? Remember, we were talking about the divergence between the Bank of England and the Bank of Japan. Well, what did we see? The tide against the Japanese yen on the back of expansionary monetary policy for a prolonged period of time cannot be reversed by Japanese authorities. So we did see this divergence continue. We also saw here the pound sterling strengthened as the Bank of England policymaker Catherine Mann warned about higher inflation and rising consumer inflation expectations. If there's higher inflation, what is the central bank most likely inclined to do? Raise interest rates to keep up and tame inflation, right? She further added that central bankers should adopt an aggressive policy tightening approach to bring down inflation back to 2% in a timely manner. What did I freaking say to the students? If we go back, look, okay? It's this simple, guys and gals. Look at this. Okay, if we go back and we look at what I said to the CYPRX students, it says right here, they still need to focus on bringing inflation down back to 2% goals, and that will still likely require a rate being higher for longer situation. I said this all the way back on September 26th to the students. It's almost as if I wrote this article. So you see how people say, oh, you can't guess the future. You can't guess the future. No, it's not guessing. It's common freaking sense, ladies and gentlemen. Do you all see that? It's literally the same. This article, if you look at the date, this article is from 10/10, so October 10th, 2023. It was written at 9:37 GMT time. I put this fundamental out to the CYPRX students on September 26, 2023, and I said to them, they still need to focus on bringing inflation down back to 2% goals, and that will still likely require rates being higher for longer. So we knew that this was going to happen based off of the fundamental data that we were getting. And I told them, so as long as price is above the 179, 180, I will only be focusing on buy positions. So having an understanding of how fundamentals cause inflows or outflows in certain market conditions in certain asset classes, you can capitalize on this stuff. It's not hard, lady. Like, oh man, okay, do you guys see? So see the layers now. So we got the fundamentals. We got the right market conditions, risk on market mood. So market mood kind of improved overall for risk on assets in the last 24 hours. And we also have the divergence between the Bank of England and Bank of Japan. Now let's get into order flow. Now let's get into technical analysis. Technical analysis is what everybody tries to do first, okay? And that's why everybody fails, because they think technical analysis is the thing that's going to freaking save them, knight in shining armor, and some, freaking Fibonacci extension or some indicator is going to make them profitable traders. That is not the right way to approach it. If you made it this far in this video breakdown and you're not a loony bin, you can understand what I'm saying and you want to learn, and you've been led to believe that indicators are going to save your trading, you need to stop listening to whoever told you that and start tracking fundamentals, start tracking order flow, start understanding what causes inflows and outflows of whatever currency pair you're trading, okay? Or whatever commodity or whatever freaking niche you're trading, okay? Freaking, you can even be trading energy stock or whatever with this. I don't know what people freaking trade, all kinds of crazy stuff, right? Okay, so now let me show you guys. So think about the layers we're making. Fundamentals, check. Favorable market mood, check. We know that the Great British Pound is a risk on, or tends to benefit in a risk on market environment. We saw that market environment. So we have check, check. Fundamentals, check. Market environment, supporting bullish thesis, check. Let me show you guys 8-hour narrative. Okay, so we're going to start on the 8-hour. Last week, what did we have in the market via the Great British Pound against the Japanese yen? We had that massive decline in price via the intervention between the Bank of Japan, right, intervening with their currency to stabilize the yen. That caused a massive sell-off all the way down to the 178. That was unpredictable. Nobody could have gauged that. However, we saw a nice bullish recovery after that where the market created a failure swing low. We saw a bullish order flow, i.e. you can see these two candlesticks completely engulf these two bearish candlesticks that caused this sell-off, or that led to this sell-off more so. And then we continue to see bullish order flow. So if the market makers, logically speaking, are not going to target this low or this low, where else are they going to target in the market? If they're not going to target lows, ladies and gentlemen, they're going to target highs, right? We talk about this all the time on the channel, okay? So that was the 8-hour narrative. That's why we were targeting, i.e. anything above the 182.800, potentially coming into the 183, maybe even the 184, because if we're not going to make new lows, we're going to make new highs, which is what the market's doing now. So where does that project us? A couple of pips, anywhere 50 to 100 pips above the previous high, which is what we're experiencing now, right? Which is what we projected. You guys saw in the analysis. If we go over, look at the projections that we gave to the students well in advance. You scroll right down here to the analysis. It says, in such a scenario, there is the potential for the price to increase further, possibly reaching the range. So we had a range of the 183 to the 184. That puts us right here in this area, right? This general vicinity where we're operating at now. So we already had that projection planned out. So think about it. Remember, we're building layers for you guys. I'm not trying to complicate anything. I'm just showing you guys our full market approach. Now, obviously, of course, this is scratching the surface of what we provide for the students, but this is just a general overview on how we gather our approach to the market. You want a logical approach to the market, a well pre-planned approach. So we had fundamentals backing our bullish narrative. We had bullish market mood, i.e. risk on market mood, supporting our narrative. Now we have higher time frame, i.e. the 8-hour, supporting our bullish narrative, where if the market is not going to attack these lows after the injection of liquidity from the Japanese yen, by telling us it's not going to do so, it created what? Higher lows in the market that led to higher highs, that led to higher lows. That's bullish order flow on the higher time frame. You want to trade in tandem with that order flow. Till that order flow is broken, you want to trade in tandem with it. So where's the market most likely going to project itself into? These highs. That's logic. Boom. 8-hour down. So now we can add that onto our layer. We have 8-hour analysis down. So think about it. Again, I want to give you guys these layers. Fundamentals check. Market mood check. 8-hour higher time frame analysis is bullish. We just showed you guys how we were able to gauge that, right? Now let me show you guys hourly. So now on the hourly, what we like to do here at CYPRX is we like to focus on the previous 2 sessions, right? So if I'm trading this Asia session, what I like to do is I like to look at the day prior. Well, the day prior, you can see here, this is when the market opened. This is where we had that injection of capital into the Japanese yen because we had that data-induced geopolitical tension over the weekend, right? Which caused a demand for safe haven currencies, i.e. the yen safe haven status picking up strength here. You can see that. We gap down. But here you can see, remember that order flow we talked about all the way back from when the Bank of Japan intervened with their currency and created that same market maker pattern that we see here, which is sellers exhausting themselves significantly enough at one of our delta zones that are predetermined by our back-end software, right? And you guys can see here, buyers start to pick up bids in that same order flow pattern that we were talking about before, where again, sellers exhaust themselves, buyers start to come in, are interested at this price, and they start to create bullish order flow, higher lows that lead to higher highs in comparison to previous bearish price action. This is the market turning around, right? This is reaccumulation of price so that it can be projected higher, right? And you guys can see now. So we have this Asia session where previous Asia session gap down. So this is where the daily candlestick would have opened right here. Okay. So you have to think of this as a daily candlestick now that we're on the hourly time frame. Now you can see this new Asia session. So we traded this Asia session here. The next Asia session on Monday, what can we see? The same bullish order flow continuation. Okay. Here you can see the Asia session open, and what do they do? Here's a low. Asia session opens, they push price back down into that low, they buy for their session, right? They push price all the way up to here. London session, look at this. At exactly 11 p.m. Pacific time or 7 a.m. UK time, the market makers drop price straight down. Look, I'm not making this up. They drop price straight down into where Asia session bought from, create another failure swing low fractally in the market, because on the lower time frame, remember, we're on the hourly. On the lower time frame, these candlestick wicks would translate to candlestick bodies and whatnot on the lower time frame. And London session bought and drove price higher. So now think about it, right? Think about all the layers that we have so far. Again, I want to remind you all how we're showing you how we built up to be so confident to place a trade like this. Easy. We had fundamentals, check, right? Divergence between the Bank of England, Bank of Japan. Okay, we had a risk-on market move, which tends to benefit the Great British Pound. Risk-on market environment, Great British Pound tends to benefit from that. We have 8-hour technical analysis, bullish, trade in tandem with that order flow. Now I'm showing you guys how we have 1-hour bullish order flow. How? How do we see that? Market gap down over the weekend, daily open. All of that bearish order flow was canceled out with this market turnaround right here. Then we open up into another day. When we see that continuation of bullish order flow continue, we see this Asia session sold, bought from a discount, past price action over to London. London, what did they do? Market opened. They pushed price down forcefully into a discount so they could clearly buy at an institutional delta level or a clear round psychological level, most likely the 181,500, right? And then they injected money into the market, buying again at a discount, passing price action over to New York. So now This is where we gather our areas of interest here at CYPRX. So think about it logically. Fundamentals are bullish. Market mood is bullish. 8 hours bullish. Hourly is bullish. But now this is the area. This is how we define our areas of interest. This is the last little tiny, icing on the cake I'm going to give you all. So logically speaking, in order for us to reverse price action narrative from bullish to bearish, this is the first area of interest that we would need to see broken. Why? Because this is the area where price came back during this Asia session, tested once. London session saw the buy at a discount as well to drive price higher. So now we can see this as sellers exhausting themselves here, buyers coming back at this interesting psychological level to drive price to new highs. So this is our first area of interest where if we want to be sellers, we need to see this level broken, where maybe in the future, we see this level broken, retested, and then we see bearish continuation on moves below where we can start to look for sells. But until this happens, we're not just going to be guessing tops, selling because we see these little tiny bearish pullbacks on the lower time frame. No, we want to trade in tandem with all this order flow. Remember the fundamentals, the market mood, the 8-hour time frame bullish. Now the 1 hour we can see bullish order flow. Why would you try to trade against that, right? So think about it. We told the CYPRX students safe buys above the 182.800. Thinking about that 8-hour target above those previous market highs, you can now see how this London session, remember those previous market highs were at the cycle level 182.800, right? Well, now you can see London session, what did they do? They passed price action over to New York. New York session continues the trend by doing the same thing that Asia and London did. They push price down into a discount and then they start to buy, right? So now we're on the hourly time frame. We want to trade in tandem with that order flow. Now we can go down to the lower time frame. So let's go down to the 5-minute. Okay. And I want to show you guys fractally what New York session did. Okay. Because they did the same thing that London and Asia did. Look, I'm going to show you. Asia opened, sold, bought at a discount. Generally speaking, we're not going to get into the details. But London, what did they do? London, 7 a.m., push price up, drop price down, bought at a discount. So we need to trade in tandem with that order flow now, right? Asia bought, London bought. Why would we be sellers by any means necessary that is trading against the market trend? I'm just trying to show you guys. So now what do we see? Remember, we traded this Asia session. New York did the same exact thing. They opened, ranged price a little bit. They created a liquidity trap here with equal lows, i.e. retail support traders in the market. We don't trade those methodologies. They get liquidated. Boom, price drops into a discount. New York buys, right? Now, look at the price action when price action comes into Asia. So think about it. Think about the conditions and how we've gotten this far. If you're still here, freaking smash that thumbs up button and subscribe. You're a trooper and you're learning something, right? So we have fundamentals backing our bullish narrative. We have risk on market mood backing our narrative of higher targets to potentially come into fruition. We had 8-hour narrative backing our whole entire technical analysis thesis, right? Trading in tandem with the 8-hour flow. Now we have 1 hour areas of interest where price action pulled back, bought during Asia, pulled back, bought during London. Now we also see New York, same thing. Ranged, dropped in price, same thing that Asia and London did, and bought before passing price action over to now Asia. This Asia session that we traded, look how easy this is. So why would we trade against all of this order flow? Let me blow your mind and show you what retail traders are freaking doing right here. Okay. This is where your retail trading guru comes in and they're like, oh, this is a resistance sell right here, right? No, this is what we were targeting here at CYPRX, because think about every single confluence that I've given you so far has hinted at potential of price going to the upside. Well, your favorite retail guru is telling you that this is resistance here and for you to take sales at this level here and here. We're trading against you because we're trading in tandem with the banking institutions who are clearly driving price higher. So here at CYPRX, we said to ourselves, as long as now this is where our institutionalized delta zones come into fruition, i.e. gathered by our backend software, you can see here how at the bottom of the institutional delta zone, we start to pick up buys. Here, price drives to highs. Price comes back down into discount. We start to range, but we can see buyers accumulating orders. We have multiple PDFs talking about this in the CYPRX chat. This is the institutional pattern where price, again, has made this on the 8-hour. We showed you that, right? We showed you how price has made this pattern. It's the same exact pattern, ladies and gentlemen. Look. It's the same exact freaking pattern. Here's the wick, grabbing the low, higher low coming in after, bullish order flow following suit. That's the 8 hour. We showed you on the 1 hour how that's to be the case. Same thing here. Low, wick, higher low that comes in after, price continues to the upside. It's the same exact pattern. Now on the 5 minute, we see that same exact pattern coming into this Asia session, right? We see lows, wicks down into those lows, buyers continuing to pick up bids from these levels. So we see institutional interest. Remember, institutions are the only people with the amount of money to tank price down into a discount for them to start picking up buys, right? They're the only people with the amount of money to do that. So we have to trade in tandem with that order flow. So all we said to ourselves here at CYPRX was if these equal lows get ran, that would then lead for us to capitalize on a break of market structure to look for a buy continuation move. If we see that bullish order flow is still being met, we are going to trade in tandem with that order flow. So what we're looking for here at CYPRX was a break in market structure. Watch what happens when we get that, right? So there's our break in market structure. Here's our new price range, right? So you guys can see here, that same exact pattern now fractally. Here's a low. Here's sellers exhausting themselves. And here's that higher low that we've been looking for. We saw in the 8 hour, we saw in the 1 hour. Now we're seeing that on the 5 minute. Here's our new bullish leg. So all we said to ourselves is where's bearish candlesticks that we can place. Personally, I like to place buy stops above highs. I don't like to use market execution. So I started to look to place buy stops above bearish candlesticks. The safest place where I saw that there was an opportunity were safe buys above the 182.800. So I placed my buy stops right above that psych level and then boom, waited for price to tap me in. However, again, remember, most people will say, oh, you're just doing hindsight testing right now. No, I showed you guys how in the chat, well in advance, we were talking about this well in advance. Remember, I'm doing this analysis at almost 11 p.m. now at night here in California. I gave this analysis almost 24 hours in advance at 7 p.m. last night. You guys can see Monday, October 9th. At present time, I'm closely monitoring two specific trading opportunities within the market. The first pertains to initiating buy positions above the level of 182.800. So we talked about it well in advance. I even gave the CYPRX students a screenshot showing them exactly what I wanted to see, right? Look, break above the 182.800, retest, buy continuations. Look at what happens. Just to show you guys how accurate this is, this analysis, this pre-planned approach, okay? We come back, we break it, retest, buy continuations. Same thing that we were analyzing, straight up into the deltas, straight up into the pre-planned psych levels, 183.000 to the T, profit taken, one and done, okay? Simplistic approach. We're not looking for freaking 1 to 20s. We're not looking for over leveraged positions. We're not looking to follow some indicator, some magic Fibonacci sequence, none of that crap. This is layers. There's layers to the understanding of how these markets work, okay? First, we capitalized on understanding fundamentals. We started talking about fundamentals that could affect price of GBP/JPY way back from the 26th of September. It goes farther back than that, but I didn't want to bore you guys to death, right? Then we capitalized on understanding market mood. Was there a risk off or risk on market mood? There was a risk on market mood, which tends to benefit the Great British Pound. So we put that in our arsenal. Then we went to approach the market on the higher time frame. Where is the higher time frame headed? We started on the 8 hour, okay? Solidified that the 8 hour was bullish, showing us bullish intent, buyers in control. Then we scaled down to the 1 hour. We confirmed that through checking out what? Through doing what? Remember, I told you guys, little key tiny gems. I like to look at the previous 2 sessions. So we did that. We looked at the previous 2 sessions. We gathered what the order flow of the market was via the 8 hour down to the hourly and only focusing on the previous 2 sessions, trading in tandem with that order flow. I showed you guys how 1, 2, 3 sessions all bought price. So why would you trade against that order flow as long as price is above these 1, 2, and 3? That gave us our areas of interest to say, okay, price is either going to do one of 2 things. It's either going to continue bullish or it's going to pull back into these lower levels for discounted buying opportunities where we still need to be able to react to be buyers at a discount if that's what price decides to do, right? But I told you guys, why would you attempt to sell if price is above these highs where previous banking institutions were buying from? Makes no sense. Then I showed you guys on the 5-minute chart how we were respecting bullish order flow coming into this Asia session, right? We were operating in this bullish leg. We came into the delta. We started to accumulate buy positions. And then fractally here in this area, once we broke into the Asia session, we continued bullish order flow. Here's the same pattern that we've been seeing since the 8-hour time frame. Break of structure, higher low that comes in after, higher high, higher low formation, bullish continuation. Once price pulled back, all we did was piece all of those layers together to then say, okay, now we can get a solid risk to reward, right? I personally like to look for 1 to 1.5s, 1 to 2s. That's just my approach. Most of the students here at CYPRX like to look for 1 to 3s, 1 to 4s. Okay. But because I'm a high frequency scalper personally, 1 to 1.5, 1 to 2 for me, in and out, 2 trades like that per week, and I'm solid. Maybe 1 trade some days, some weeks I'm feeling froggy taking 2 to 3 trades per week, but to me, that's over trading. Okay. So pre-planned analysis, fundamental understanding, logical technical analysis, if you're still here and you want to stop chasing the market, you want to stop going off of indicators and freaking magic gurus that don't know what the heck they're talking about. This is all just scratching the surface of the intellectual information that we give here at CYPRX, breaking down our approach to the markets in depth, over 80 hours of course material. I'm not trying to sit here and segue you guys into something that isn't going to benefit you via your knowledge curve and educational level, an approach to these markets. Okay. It is not financial advice. I didn't tell the CYPRX students to go out and freaking buy at the 182.800. I told them what it is that I'm looking for in the market and what it is that I would like to see via market conditions before I react to price. But just being transparent with the students, I think that transparency with a mentoring program will put you in a position where you can therefore then believe in your mentor or the individual that is teaching you this information, so that way you can therefore believe in yourselves. Okay. If you don't believe in your mentor, you're not going to believe in yourself. You don't believe in yourself, then you're never going to get anywhere. I'm done ranting to you all. Hopefully you all enjoyed this video breakdown. Smash that thumbs up button and subscribe if you did, if you learned something. Even if you're not a forex trader and you learned something valuable from this trade breakdown, I would appreciate it if you smash that thumbs up button and subscribe to the platform. Consider visiting our website, CYPRXtrading.com. will get you access to our monthly subscription program where you will have access to these white institutional delta zones that you see on my charts. And if you want more of an in-depth perspective on how we approach the markets, you guys can visit CYPRX.teachable.com where you can enroll in our private mentorship program. Many blessings to you all as always. Be cognizant out there, be safe, be aware, and I'll see you all in the next video breakdown.